On today's episode of What's Going On with Shipping, can we see proof of your war risk insurance, please? I'm your host, Sal Mercogliano. Welcome to today's episode. Every time I think things are going to quiet down, it's going to get a little bit more peaceful when it comes to oceanic shipping. Nope, it gets crazier as it goes. I've got a list of stories I want to go through with you, get some context for what's going on in and around the Red Sea right now. A lot of developments since the last episode. If you missed the last episode, we talked about 7 big factors going toward containers and container shipping in 2024. Be sure to check it out right above there. But this episode is going to focus on the Red Sea and what has developed since then. If you're new to the channel, hey, take a moment, subscribe to the channel and hit the bell so you'll be alerted about new videos as they come out. All right. So first, articles. We're going to be going through some G-Captain articles here for you from a variety of different sources. This one's a Reuters. Red Sea attacks continue to disrupt global trade. Just a minute ago, just checking online, another attack just took place. But what we're seeing here is missiles being launched out of Houthi-controlled territory, hitting. This one on January 16th was a target out of Yemen. They hit a Greek-owned bulker with a ballistic missile, causing damage. We're seeing attacks by ballistic missiles, anti-ship cruise missiles, and one-way drones. These attacks, while they're not of the same scale that we've seen in the past, are continuing, meaning the Houthi are still able to interdict shipping heading their way. Going on with these stories, this story by Barry Parker, really interesting. Red Sea crisis, possibly the beginning of something bigger. I got to say, I don't play conspiracies. I don't play that at all. I really don't. However, I teach a course in World War I where a series of small events led to a big war. Man, you're seeing a lot of small events happening right now. And this is not a good thing. We're seeing attacks out of Iran to Pakistan to Iraq. We're seeing Ethiopia and Somalia. Egypt has got issues with Libya on its west border. It's got the Sudan issue on the southern border. We've got Israel and Gaza. We've got a whole batch of issues that are destabilizing the region. And the question is, does this apply to a bigger issue? We've got the Taiwan elections going on. We've got low water on the Panama Canal. This is a lot of issues all coming together, and it's all impacting shipping in a variety of different ways. So let's look at focus right here on the Red Sea and what we're seeing. So first off, the Maersk CEO, Vincent Clerc, came out in Davos. The big meeting is going on in Davos. I didn't get invited again. Another year to Davos. I don't understand. I had the private jet all warmed up, ready to go. It's been running ever since because, again, I have to be climate efficient like everybody at Davos. So didn't get the invite, but Vincent Leclerc said on Wednesday that the disruption to global shipping caused by the attacks will probably last at least a few months. Now, he said that acting like he was sad about it, but let's be clear. The shipping companies quietly are very happy about this. They are putting their excess tonnage on these routes. Freight rates are up through the roof. These are all good for the bottom line of the container companies. So while they're talking about how bad this is, in truth, economically speaking, this is going to be good. Matter of fact, we just saw the economic forecast for 2024 being changed for all the companies upward. Zim, Maersk, Hapag, you name it, they're all forecasting going up from where they were originally. Suez Canal transits fall to the lowest level since the Ever Given grounding. Well, since Ever Given was 0 for 6 days. I'm not exactly sure we're there yet, but it is falling, and that's basically the 7-day average. We're seeing those levels come down. This is from the IMF Port Watch system. This is the chart that they have right here. This is the chart for the past month. Goes back to 14 December. Back in 14 December, you'll see the 7-day moving average was 76 ships a day going through. A year ago, it was 71 ships. Right around Christmas is where we saw the divergence. This was the attack on Maersk Hangzhou, and that was the one that really triggered it. And then you see the divergence here going below the average. And what you see here as of January 14th, the 7-day moving average is 49 vessels, whereas a year ago it was 70. That's a 21 ship delta. Each ship going through the Suez, on average, 500,000. It's probably more for these ships because what we're seeing is a lot of tonnage not going through. If you change this over to volume, you see the volume dip here. Volume dip on the 7-day average was 4.6 million tons going through. Right now, the 7-day average is 2.8 million tons. That's a significant change. And if you look at the composition of the ships going through right now, tankers are 14, cargo ships are 36 of the 49 going through. We're seeing more container ships rerouting around, the exception being COSCO. The Chinese overseas shipping is sending a ship infrequently through. And then the other is CMA CGM because they're using their French frigate that's in the area to escort them. Matter of fact, the French Navy just posted a tweet with 4 images of the French frigate escorting their ships through. Something the US Navy told me was not happening. It is happening because the French Navy confirmed it. All right. Moving on here, U.S. confirms new military strikes after the Houthis hit a bulk carrier. This is after the attack on the Greek-owned Maltese flag bulker. But understand, a U.S. flag, not U.S. flag, a U.S.-owned Marshall Island flag bulker, the Gibraltar Eagle, was hit. A lot of Gibraltar ships hit. Gibraltar Maersk, now Gibraltar Eagle are hit. Eagle is stationed up in, or is headquartered up in Stamford, Connecticut. Their vessel was hit. So we're seeing bulkers being hit now. These are ships that carry bulk commodities or grain, you name it. U.S. Navy seizes Iranian weapons bound for the Houthis. So U.S. Navy SEALs operating off USS Louis B. Puller, an expeditionary support base, has been conducting operations boarding vessels on the high seas. Unfortunately, this has led to the tragic loss of 2 U.S. Navy SEALs. They were boarding a vessel. One of the Navy SEALs came off the embarkation ladder, went into a water. The other Navy SEAL jumped in with them. Understand, while Navy SEALs are trained divers and swimmers, they're encumbered by a lot of gear during a boarding operation, bulletproof vests, a lot of weaponry. You got to peel that off to float. And if they didn't get that off, then that's the problem. Plus, you're falling next to a ship, you've got propellers, you got all these issues, and unfortunately, we've seen the loss of these 2 Navy SEALs. But what they did find on the ship when the boarding took place was a lot of components and weapons for medium-range ballistic missiles and drones. So obviously, Iran is providing the weapons for the Houthis. We knew this already, and there's no doubt about this. But here is more and more evidence. Plus, we see Iran doing a whole series of attacks throughout the region. They bombed Pakistan not too long ago. They hit Iraq the other day. So the Iranians are really stepping up their procedures. There's a report over from Tanker Trackers that the Iranians are finishing the first of their 2 drone carriers, modified container ships. These ships can launch and recover aerial drones. That represents a whole new level of threat, potentially out in the Arabian Sea or on the oceans in general. So the Biden administration has just redesignated the Houthis as a terrorist group, but not exactly. They're putting them in the minor league of terrorist groups. They are now what's called a specially designated global terrorist. So the Houthi, or Ansar Allah, as they're known, has been designated under this. This was a talk given by the National Security Advisor, Jake Sullivan, up there, but it doesn't go in effect for 30 days. So if you're the Houthi, you have time to move assets, money, whatever you need to do, because 30 days from now you become a terrorist. That's good to know. So not exactly sure this is the deterrent he thinks it is, because I don't think it's much of a deterrence to be put on the specially designated global terrorist. Again, not the A league, not the top league. This is the kind of below them. This is kind of the in training terrorist group. And then you have 30 days to move all your assets. Doesn't seem strange. Meanwhile, Mike Scholler wrote this piece. EU members state back new naval mission in Red Sea. So EU states have given initial backing to a naval mission to protect ships. This sounds great until you look at the details here. When you realize the objective was to establish it by February 19th at the latest and make it operational soon afterwards. In other words, transition Operation Prosperity Guardian over to an allied mission with the goal of doing it by February 19th. So a month from now, we're hoping to see the European Union stand up and take the role from the United States with U.S. support still available. Not sure this is going to work. Moving on here on the cases. Chairman Xi over in China steers China Navy away from the Red Sea risk. So as the U.S. and U.K. are launching these strikes, China finds itself sitting on the sidelines. And again, even though China imports about half its oil from the Middle East and exports to the European Union, China is not getting involved. The 45th Escort Group is not doing any active convoying, although we just saw 3 ships sailing into Djibouti, which are Chinese owned, with a Chinese naval vessel. Not sure this was a convoy or just happened to be sailing in together. The Chinese may be doing some escorting. We're starting to see an early indication of that. But right now, they would be escorting their ships. They're not talking about escorting other ships at this moment. We're seeing other ships begin to divert. LNG tankers, liquefied natural gas tankers divert from the Red Sea as Qatar warns of escalation. 3 countries on the planet are the biggest LNG exporters: United States, Australia, Qatar, then Russia. Qatar tends to export a lot of its LNG to either Asia or the middle or to Europe, principally after the natural gas pipelines were shut between Russia and Europe. But now that natural gas from Qatar has to go, or Qatar has to go all the way around Africa to get to Europe. There's a finite number of LNG tankers in the world. Expect to see LNG charter rates start going up. Expect to see the cost of LNG begin to go up. Hopefully Europe has a nice warm winter like they had last year, because if it's a cold one, energy is going to get expensive in Europe. Meanwhile, Russian oil is still going through the Red Sea despite the Houthi missiles. Good to know the U.S. and its allied navies are on patrol guarding Russian crude oil as it goes through the area. This is the irony of all this, that U.S. and European trade is being diverted around Africa, but the trade that's going through here is Chinese and Russian. That's what we're doing. We're guarding Russian and Chinese trade. Now, there's other trade going through. Let me be clear. There is other trade going through, but it is Russian crude that's benefiting from this. Remember, Russian crude coming out of the Baltic and the Black Sea. They are meeting other tankers off of Spain and Greece, consolidating into bigger tankers. This is ship-to-ship transfers. They then come on these larger tankers through the Suez, down the Red Sea, through the Bab el-Mandeb, and head over to the Middle East, to India, to China, to be refined into diesel fuel, then loaded in other tankers and shipped back to sell to European Union, because this efficiency of the boycott against Russian oil is working so good. And we're going to come back to that in a second. Red Sea insurance soars after U.S. strikes. Okay, I have to ask, what did the U.S. think was going to be the result of the missile strikes? No one who had any sort of competence did not think we were going to hit the Houthis and be effective in hitting the Houthis. That's not the question. The question is, what did you think was going to happen? Because what has happened is the war risk insurance, the added insurance you have to pay on your vessel, has increased. At the start of all this, back when Galaxy Leader was grabbed, it was 0.02%. It's after that accelerated up to 0.7%. They are now charging between 0.75 to 1%. If you have a ship of $100 million, 1% war risk is $1 million. And understand, container ships can be valued from 100 million up to $250 million. If this war risk continues to climb, if it gets to Black Sea levels, that's 2.5 to 3%. If it gets to the rate it was during the height of the tanker war in the 1980s between Iran and Iraq, that was 7 to 10%. It's crazy amount. We had to have known that the war risk was going to go. And understand, just because you have cut down the number of missiles that are flying from Yemen at ship, and it's significant, the number. I mean, you had 21 missiles shot the day before the attack. We're now getting single missile launches. It doesn't matter, because the way the insurance companies price this is they go back to 2003 when the Yemen hit a tanker called the Limburg and caused massive damage to that vessel, massive fire, near loss of the vessel. It was nearly catastrophic. They go for their worst case scenario. And even though you're batting nearly 100% in shooting down drones and missiles, it only takes one to get through. And that one that gets through and it has a catastrophic impact on the ship, the insurance company has to pay it out. And if you've ever dealt with insurance companies, it's no different if it's a shipping insurance company or a car or a homeowner's. What insurance companies want to do is you pay your premium and them never pay you. And most importantly, they don't want to have a huge payout. They want to minimize that payout. No one wants to pay out for a loss of a container ship with $250 million worth of goods on board, or a oil tanker with massive environmental impact, or an LNG tanker that can explode and kill who knows how many people. They want to minimize this. So you can't just throw missiles at the Houthi and think this is going to solve it. I know at the Surface Naval Association convention up in DC last week, lots of high-fiving about the Mason and the Carney and all the destroyers that are down there. They've done fantastic. The U.S. Navy has done exemplary work. Same thing for the Diamond and the French frigate and the Italians and all the other navies that are there. But you have to look at this commercially. You have to understand that this is not a pure military issue. It is an economic commercial issue. And if your result raises the war risk insurance, you have not helped in this scenario. You've got to get the war risk insurance down. That's the big issue that's at play here right now. This story bothers me more than anything else. Ship insurers seeking exclusions for US and UK vessels from Red Sea coverage. So this is coming out of an insurance company called Marsh. This is an underwriter who insures vessels. And what they're talking about here is that insurance companies may not provide war risk insurance for US and UK ships, not flagged, but owned. The US is the 9th largest owner of shipping in the world. The UK is number 11. This is significant. You're talking about not being able to get war risk insurance, meaning US UK ships won't be able to go through. The irony is it's US UK ships that are protecting ships going through this region. So we would not be able to sail a US owned UK ship through an area defended by the US and UK navies. Instead, who's getting benefited from this? It's the Russians, it's the Chinese, it's everybody else. It's insane. It's crazy. And Marsh, let's be clear, is the same company that is underwriting the war risk insurance so that Saudis can sail their billion-dollar yachts to Monaco to be at the Formula One races because there was a big fear that the yachts wouldn't be able to go from the Persian Gulf up into the Mediterranean to be there. So I'm not exactly sure we see this actually happen. This is just one broker talking about it, but it's an interesting story if the other ones chime in on it. Finally, this story. So the Prime Minister of the UK, Rishi Sunak, came out. Now, the UK was the one country besides the US that participated in the strikes. They brought 4 Typhoon fighters down from Cyprus, a long friggin' way to launch an attack. He's talking about this. A coalition of countries gave the Houthis a clear and unambiguous warning 2 weeks ago. He goes on, any decision not to take action would weaken international security and the rule of law, further damage freedom of navigation and the global economy, and send a dangerous message that British vessels and interests are fair game. What he wants to do is kind of stabilize the situation. I think the British Prime Minister may be a good person to do this because the British understand not just military shipping, but commercial shipping. This is where Lloyd's is. A lot of the insurance companies are there. This is a really good opportunity here to start kind of ratcheting this back down. And I think the British need to talk to the Iranians because the US can't. Because of boycotts and issues between the US and Iran, they can't talk. The British can talk to Iran, whereas the US can't. And this may be the potential to start kind of deconflicting this, because understand, if this goes on longer, there's going to be problems. If Egypt isn't getting the economy from the Suez Canal, you could destabilize Egypt. And if Egypt goes revolutionary, that's a big problem. Not only is it bordering Gaza, but the Suez Canal, it creates massive amounts of problems. If the remaining 70% of trade going through the Suez can't go through anymore. So we have a lot of issues that are at play here. And that's just a sampling of news that I looked at. I could have given you another dozen articles and relate them together. We didn't even talk about Panama Canal, low water issues, all these other issues that are floating around out there, issues in South Africa with fuel down there, port services, you name it, there are tons. But I wanted to give you this kind of snapshot of what is happening and why this war risk insurance isn't important to talk about. Again, go back into past conflicts. If you want to see where the U.S. and the Allies were winning in the U-boat wars in World War I, World War II, you look at the insurance rates. When the insurance came down, they were winning, but they never eliminated the war risk insurance. Go back to the Civil War, American Civil War. What led American ships to hoist the British flag? It wasn't the Alabama, as much as I love the Alabama. It wasn't the Alabama sinking 63 Union ships. It had nothing to do with it. It was the escalating war risk insurance. And the U.S. failed to underwrite that war risk insurance to provide a avenue by which U.S. shippers could get cheaper war risk insurance. The cheapest way to mitigate the war risk insurance was to fly the British flag, because the U.S. fighting of the commerce raiders was to send out ships and try to find them needle in the haystack. That didn't work. We need to come up with a solution to fix this problem in and around the Red Sea. I hope you enjoyed today's episode. If you did, hey, take a moment, subscribe to the channel and hit the bell so you'll be alerted about new videos as they come out. Leave a comment, share it across social media, give it a big thumbs up, and if you can, support the page. How do you do that? You hit the super thanks button down below, or head on over to Patreon, where you can become a monthly and yearly subscriber so that I can basically fuel up my jet waiting to take me to Davos. I have no jet. Nothing. They're pointing to a wall right now. There's nothing here. Or you can help me stock up for my war risk insurance when I bring my canoe through the Red Sea as part of what's going on with shipping on location reporting. Until our next episode, this is Sal signing off.